It is grim news on the economy. Over the next 2 years, more than 3.5 million homes are expected to be lost to foreclosure. According to some economists, the new wave of defaults, they're likely as risky loans reset to sharply higher payments. Joining us now in studio is Dani Babb, the housing expert and author of The Accidental Landlord. With a good morning to you, let's talk about the kinds of mortgages that are most at risk. Which ones?
First of all, we have pay option arms. Those are basically called pick-up pays if you're with Wachovia. And they allow the buyer to either pay a negative amortization, in other words, lower than the interest, a 15-year or a 30-year payment. Those are a big risk because most people chose the lowest option. They've been adding to their balance, a big problem. The second biggest risk, of course, are any subprime mortgages that are about to reset.
Okay. One report, though, shows that November foreclosure rates, they were down 7%, and you'd think that'd be the silver lining to all this, but it's not when you look to the future?
Well, actually, it's because of state moratoriums. We had states like Florida and some surrounding states that actually put a complete freeze on foreclosures, and those were some of the biggest states. Yes, it's a little misleading of a statistic.
Okay, so you think that things are going to get worse in the housing market attributable to what? I mean, people losing jobs? Is that going to make this go worse?
I don't think that's going to have the biggest impact. When we look at the median home price versus the people who are losing the jobs, they don't really align very well. So I think that's going to be the biggest contributor. What we're going to start to see are people unable to refinance. The jumbos are going to be a big problem. And we're starting to see people re-default. So those people that got a loan modification from their lender, about half of them are going into default a second time. And we also have some people intentionally not paying their mortgage because they know that's the only way the bank is going to modify their loan. Those are also big risky people.
Okay. Yeah. What does this say about the overall economy?
Well, this is the underpinning, in my view, of everything else that's happening because of the rapid devaluation of homes. We cannot value assets. Banks can't value assets until home prices stabilize. So until we start seeing this work its way through the market, it's going to be bad news for, in my view, at least another year. At least another year.
Mm-hmm. And there are those who say into 2010. Is that unrealistic or entirely possible?
Entirely possible. We're looking at probably more than 3 million or more additional foreclosures, about 1 in 5 people by the end of 2010.
At what point do you see prices begin to come back and rebound?
Well, we already are in certain areas. It's so very local. They're not rebounding in California, Florida, the Sun Belt states, but they are very steady in Texas, Idaho, Washington State, Colorado. So we already have some areas that are doing okay.
Okay. Mm-hmm. The author of The Accidental Landlord, Dani Babb, thank you very much.